Let's move now into member Q&A. We had a really good question from Steve H. He may be here this morning. If he is, hey, Steve, and thank you for the question. So Steve H. asks this question. While major tech of Microsoft, Nvidia, Tesla, and Apple are up monstrously since October, if we took those out of the mix, the market has been basically flat. Can you give us your thoughts on this, please? Great question from Steve. It's on the minds of many people. I've heard this quite a bit too. We've talked about those, what they call the Magnificent Seven or the Sexy Seven or whatever they call them, these stocks that have really led the market out of the malaise and the funk that it was in 2022. And the thought is that because the breadth of the market is so thin, according to one measure, it's the thinnest it's been since the dot-com bubble. That's just according to one measure from Goldman Sachs. But not all measures show that. But the point is that, yes, we have seen a pretty lopsided rally with a large caps, these really big mega large caps really enjoying the rally more so than others. And if you take those out, that you really have a market that isn't really up too much. Well, we can prove that sort of by looking at the 2023 sector performance that we've been putting out each and every week in the Robinson Report. And you'll notice that tech, communications, and consumer discretionary are practically the only major leaders this year. You know, the S&P's up, 14-15% or so far this year. Well, much of that's coming from these three sectors: technology, communications, and consumer discretionary. Okay. Now, what else is also up? Industrials and basic materials. Okay. Very important to remember now. Remember this order. Now, you come down and you'll see what's losing right now. Well, real estate, healthcare, financials, utilities, and energy, right? All of these are down here. They're all in the red for the year. So you've really been dragged up, Steve, by technology, communications, and consumer discretionary. So it's not really just the story of 7 stocks. It's the story really of 2 or 3 sectors that are really driving this rally. Now, what's important to know is that this is actually playing out exactly as it has in the past. So while it feels strange, while it seems strange, we can actually go back and see that this is actually how it works. When you look at sector rotation, and specifically when you look at sector rotation in terms of the general business cycle. So a lot of times what you'll do is you'll overlay the business cycle with the sector rotation. You'll figure out, what sectors do well in which parts of the business cycle. Well, when the market bottoms, right? When the market is at the bottom, what tends to lead? Tech. Tech tends to lead us out. What else tends to lead us out? Discretionary. What else tends to lead us out? Communications. What else comes after that? Industrials. What tends to come after that? Materials. Okay, so now this is the exact order that we just showed on this particular page. Tech led us out of the bottom, from the bottom. Communications and consumer discretionary led us out of the bottom. Industrials lagging behind, but they're improving. As well as basic materials. They're lagging behind, but they're improving. They're not down here in the mud. They're actually rising. So this is exactly what we would expect after you hit a market bottom. You expect tech and discretionary stocks to begin leading the way. So what we're actually seeing is that we're getting confirmation that we hit a bottom last year in the stock market, and now we are moving higher. There are many voices that are telling us that the market is going to go lower. What's very important to understand about those voices is that many of them are short the market. They need the market to go down, and they will go on TV and they will talk the market down because they're short. They don't even have to reveal the fact that they're short half the time, apparently. Nobody seems to care. But they go out and they'll talk the market down to a real big bear because they're short the market. They make money when the market goes down, right? So they're saying it's going to go down. It's going to go down. It can't go up anymore. Okay, well, fine. They can say it all they want, but they obviously have skin in the game hoping it goes down. Other people are not in the market, and they want the market to go down because they want to buy, but they don't want to buy at current prices. So they're like, oh, it's going to go down. Okay, well, maybe it will, but that's not a strategy either. When we look at the real data, we see that what's supposed to happen after the market bottom is tech, discretionary, and communications are supposed to rally. Have we seen this happen before? We've seen it happen regularly. Let's go back to 2003. Back in 2003, this is when the market finally bottomed. It finally bottomed in 2003 after the big dot-com bust. Remember, just took a couple of years. Boy, the market was just going down and it was having a hard time in the wake of the dot-com bubble. But when it finally bottomed in around March of 2003, it began to rally. What led the rally? Consumer discretionary and technology sectors lead at the beginning. There's industrials, 6%. There's materials, 6%. You notice these are the ones that are up. Now, by the way, there wasn't a communication sector back in this time. Communication sector is like the new 11th sector. It used to be inside, I think, the tech sector. Or maybe, yeah, I think it was in the tech sector, but they broke it out. So anyway, so you won't see the communications here, but if you did, it would probably be over on this side. It would be up. Okay, so here we have, this is 2003 when the market bottoms and then starts to rally. What leads? Consumer discretionary and technology lead. Okay, so now let's fast forward the tape and say, okay, now let's go to 2007. That rally lasted from March of 2003 until it peaked in the middle of 2007. Okay, that's whenever the market started to show signs of what's happening. Well, by the time you got to 2007, you had energy and materials leading at the market tops, and you had consumer discretionary lagging. Okay, so what it looks like in the beginning when the market rallies is consumer discretionary and tech lead the way. They lead the way. When you get to the top, how do you know? You know because we just went through it. We just went through it in 2022. What reigned at the top in 2022? Energy. So remember we talked about this. Energy goes up, and so do basic materials. Really good at the end of the cycle. Okay, these are the ones that go up big time at the end of the cycle. They're nowhere near the leaders right now. So what we have is leaders that are consumer discretionary and tech and communications. Right, those are our leaders. Okay, so this is why we put this in, because this is very helpful to know what's leading. And once we know that tech and communications and consumer discretionary are no longer leading, what that's going to mean is that we're evolving in the bull market. But this is how bull markets begin. They begin with tech and consumer discretionary. They end with energy. Oh, and we've taught this, that they end with energy, and energy is at the very bottom. So it has a long, energy is going to have to do its own little rally before this thing is, fully over. So this just kind of lays out, I think, it addresses something that's very, very important, because we've been hearing a lot about these, this unbalanced or imbalanced market as it's been rallying. And this helps explain, why we see the leadership in the areas that we do. Okay. All right. Thank you, Steve, for that great question. Thank you for letting me address that, because I know many people probably already had that question as well.